To all our viewers, followers, and investors from the Golden Pie community, a very warm welcome to all of you. I'm Abhijit Roy, co-founder and CEO of Golden Pie, leading online platform for all your fixed income investments. This is the 16th episode of our Industry Speak series. And as a lot of you would know, here we engage with the leadership teams of companies across diverse industry backgrounds. We get to know about the company, their business models, their financials, and in a way, we empower you with the information so that when there are investment opportunities, you can take an informed decision. So in the past, we have done episodes wherein we have covered digital NBFC companies, multi-business conglomerates, PSUs, to full-stack financial services companies in the recent past. Today, I'm truly delighted to have with us the leadership team of a leading institution in the wealth management space, a new industry category that we haven't yet touched upon in your previous episodes. It's my true pleasure to have the leadership of 361 Prime Limited, a leading wealth management house in our country. We have with us Mr. Himanshu Jain, who is the CEO and whole-time director at 361 Prime. Himanshu leads the lending solutions business and is focused on scaling up the NBFC's business. He has over 2 decades of industry experience in capital markets, wealth management, and business development. Prior to 361, Himanshu was associated with Morgan Stanley, DSP Merrill Lynch, and Citibank, to name a few. Next, we have Mr. Neeraj Murarka, Chief Investment Officer, Credit Risk at 361 Prime, and he leads the credit function. He has more than 2 decades of experience in structured finance, corporate finance, mergers and acquisition, and several other finance areas. He joined the firm in 2016 and set up the credit underwriting and monitoring process, operations, and the treasury for NBFC business. Prior to this, Neeraj was associated with HCL Tech and Indian Oil Corporation. Our third panel member is Mrs. Charu Kalita. Charu is the head of treasury and fixed income trading at 361. She brings to the table rich experience of over 16 years in finance markets in end-to-end capital management and treasury management across housing finance companies and NBFCs. We also have with us Mr. Pranav Inamdar. Pranav is director at Trust Group. Trust is one of the lead managers to the latest NCD IPO issue of 361 Prime, but we will speak about that later. So Neeraj, Himanshu, Charu, and Pranav, a very warm welcome to our, discussion today.
Thank you.
Thank you, Abhijit,
Thank you so much.
Cool. Looking forward to a very engaging discussion with all of you. Let's get started. So my first question is, for the sake of understanding of our viewers, what is a wealth management company and what are the key activities that it engages in? So this is question to you, Himanshu, if you can share your perspective on this.
So wealth management has been a practice worldwide and globally very, very important pillar along with fixed income and investment banking. So these are the primary 3 pillars for any financial services to build up their businesses. In India, it has a history of about 30 years plus. And started by Kotak and DSP as a group. And then many multinationals, they started doing through their retail management practice, early 2000 as well. There has always been, in Indian context, a gap in terms of professional managing money because it's always been a play of family. It's always been play of some of the chartered accountants. That's how exactly the ideas, the way money used to be managed. But over a period of time, with the emergence of some of the brokerage houses, talking about early 2000, people got a bit more agile, alert, and sophisticated in terms of looking at their money. And this entire culture, startup, early age businesses, founders, I think that has just put the wheels to motion in terms of this entire industry now growing leaps and bounds in the last 15, 20 years. 361 Prime, which was earlier called IIFL Wealth Prime, started by two gentlemen, Karan and Yatin, way back in 2008. This was as good as any startup with initial limited capital as well. And it was supported by IIFL as a group then. And together, this entire wealth management practice got started. And story fast forward, today as we speak, I can just share some of the data points and the process. We will talk about the progress as well. We have about 4.5 lakh crores of AUM. We cover almost 10,000 families. We have about 200 plus bankers. Overall staff strength exceeds about 1,000 odd people. We operate from about 28 locations in India and another 3 locations offshore. And to continue and to pursue this business, we have all licenses from stockbroking to trusteeship to AIF to AMC and NBFC again as one of the licenses which got acquired in 2015-16. Idea is that wealth management clients, those who have some short-term needs, or in case if they have any interim needs, without liquidating their portfolios, they can avail a loan facility against the portfolio which they have built with us. So that's the background of this journey. 361 Prime got listed through a demerger process in 2019. Today, it has a market cap of about 25,000 crore plus. We have some marquee shareholders, Bain Capital about 24% plus. Then we have Capital US, which holds about 14 odd percent. And then there are a series of mutual funds and FIs and other institutions. Together, all of them, they hold about 65 odd percent. Founders and employee hold little under 20 odd percent, and balance is the public float.
Got it. Got it. So that gives a very good perspective about, 361 Prime to start with. So one question that readily comes to the mind is 361 Prime. It's a very unique name and it's very catchy, right? What has been the rationale, if I may ask, for picking up this rather unique name?
Simple, it's not very complicated. I think 361, one is around anything around client. So one is for client, 360 is anything, whatever client is looking at. We are putting across our platform, we are putting out our services, the products, the people. This is anything and everything around client. And that's how we put across this name. Idea is if you look at our client base, so from a conventional way of managing wealth, if you look at today, most of our clients are founders and startup CXOs as well. And this name ideally should resonate them as well. And that possibly is this transition which happened about 18 months back. And this is being quite appreciated and well received by everyone, within the financial services fraternity across clients and other stakeholders as well.
Great. So let me move on to ask, the next question, which is 361 Prime you mentioned, wherein 360 stands for 360-degree services. Anything that the client asks for, it's a service, wealth service that the institution would provide. So what is the business model of 361 Prime? How would you get your clients? How would you service them, right? And, what are the various functions that you have to support your clients?
Great question, Abhijit. So we are a subset of 361 Holding as a company, which is a listed company. NBFC model, NBFC license rests with 361 as a group. Idea is, which I have already kind of stated, is any wealth management clients, if they have any funding requirement as well, one, you need a license, which is an NBFC license. Second is you need capital to support that activity as well. So in 2015-16, when General Atlantic did a capital infusion in 361, most of this money got into capitalization of 361 Prime. So that is the starting point, 2015-16. Now, how we source our clients, this source of client is all wealth management existing clients or prospects of wealth management clients. So we have all these clients being serviced and being sourced from bankers. In turn, all what we do is, as and when any bankers spot any opportunity on the lending side, they reach out to us from a NBFC platform. They do the introduction, NBFC takes over those relationships from a funding standpoint. We look at some of the prima facie details in terms of collateral, KYC, anything that is required from a credit underwriting process. Once the diligence is being carried out, the client gets onboarded on the NBFC platform. Whatever the requirements from a KYC to a credit appraisal note to perfection of collateral and so on and so forth. And then it becomes 361 prime client who's being serviced by the team of NBFC as a whole. So simple, bankers source transactions for NBFC. In turn, those transactions get onboarded on NBFC, serviced by NBFC team, and any requirement around lending will be addressed by 361 prime from a scope point of view.
Got it. Got it. Would you also look into the asset management of the client, or it would be only on the lending side?
So two things. One is I think it's important to know what exactly we lend against. So we lend against client portfolios, those who are with us. That is wealth management portfolio, largely direct stocks, mutual fund units, high quality NCDs, debentures, bonds, and the AIFs, the alternatives. Also, we have a small portfolio against properties. So this is essentially the underlying collateral against that we lend to our set of clients. Now, as and when clients have any requirement, they come and they share their portfolios that yes, this is what they own or this is what they hold. Basis the NBFC team will do the diligence and will figure out that against what collateral we can offer lending solutions. So yes, we will have a sight on client's portfolio, whatever they disclose, and basis which we will figure out that yes, this is acceptable collateral and a funding facility is being set up for those specific clients against which the underlying collateral gets lien marked in favor of NBFC.
Got it. Got it. So if I have to...
I think from the question is on the group perspective, on the asset management of the client from 361 group.
Yeah. So what I have understood is 361 is the parent entity, and under which 361 prime is the lending entity. It's a subsidiary, right?
Yes.
So my question was more from a global perspective, that if it's an HNI client or let's say a large family office who wants their assets managed, and along which, of course, they would also look at exposure, via lending, right, from you. Would you cater to the entire spectrum of requirement as a 361 entity, or would it be something different?
Absolutely. So just to give you an idea, if client wants us to build the portfolio, to manage their surpluses, or to rebalance existing portfolio, all of these things are being part of 361 scope of activities.
Got it. Got it.
So all this advisory, all these execution part will be done by 360. Once portfolio construct is in place, these portfolios we have a sight on if client desire to avail a funding facility against it.
Got it.
And then we will look at it in terms of what could be the overall available collateral against what could be the funding requirement. And then the regulatory norms kick in terms of loan to value, etc. And basis which the perfection of security will happen through lien marking. And a amount is being set as a loanable amount for client to draw as and when they wish.
Got it. Got it. So I think now that becomes pretty clear about the overall business model, the entire structure. 361 is a parent entity, and today we are speaking about 361 Prime, which is the lending subsidiary under 361. Or on this discussion trail is, so then how would you differentiate yourself from other wealth management institutions and other lenders in the country, right? As you mentioned, right, it is a 4,25,000 crore industry in India, and you have got a very strong.
No. So let me correct the data point. 4.5 lakh crore is being only managed by 361.
Got it. Got it. 4.5
That's,
lakh crores managed alone by 361.
that's right.
Got it. Got it. And like you mentioned, there would be other peers like you in the market. So how are you differentiated strongly from these peers? Maybe on the process side, on curating the customer side, on technology. If you can share your perspective on that.
I think for any wealth management outfit, there are three important things. One is platform, second is products, and third is people, which are our bankers and the entire support staff, which is
Right.
there. Now, from a platform point of view, if you look at players, those who are there, they offer things which are in bits and pieces. In our case, from clients' requirement from putting money into equities, fixed income, from alternative, and anything which is permissible by law of the land. We take care of everything. To, to do this business, you need various licenses as well. All the licenses are being held by 361. That is the second part. Third is you need bankers to not only do this coverage part, but also making sure that they fulfill any ask of the clients in terms of this journey. And this is where this entire integrated approach helps and also differentiate us and also put us into a leadership position over our competition.
Got it. Then I think the next question, which would be of interest for our viewers, would be see in the market. One of the key things that a lot of the players nowadays use is being able to leverage technology to to offer a seamless service across the board for the customer, give a delightful experience, provide high quality assets, do the portfolio rebalancing on the platform itself, and also have regulatory compliances to some extent, built in with the technology infrastructure. I mean, just to give a reference, prior to starting Golden Pie, I was associated with InvestNet, which is based out of US and exactly into this wealth tech space, offering wealth tech solutions for these financial institutions and heavy usage of technology there. So I'd be curious to know how 361 Prime is and 361 as a group entity is leveraging technologies to stay ahead of the curve. How are you looking at that equation?
So if you ask us, technology has been a backbone since the very beginning. And of course, the fintech and all these jazzy words have just come into play over the last 5-7 years. But technology is an enabler. Technology is something which is core to any offering, whatever you are putting it across, right? If you recollect in good old days, I mean, we used to fill those depository slips. We used to physically exchange the
Right.
checks in terms of movement of funds as well. Now, gone are the days. I mean,
Correct.
so idea is for technology to work. It is all about at the end of the day. It is helping you in terms of your processes. It is helping you in terms of making sure that you can reach out to the remotest part of the country in a seamless manner. And the most important thing is the entire experience has to be the same, right? So from this point of view, we have all the right enablers in place from client onboarding, from client suitability, from client's KYC, making sure that client, whatever they are signing up, all those documents are e-documents, right? So
Got it.
these things are already in place. Further, specifically, if client wants to place an order, that all can be done through our app. A further step beyond that is, in case they want to buy and sell a particular security which is listed on the stock exchange, that can also happen through our app as well. The entire client reporting is all where you have a complete snapshot that is available as good as on real-time basis. Client can download their portfolio and can see basis end of the day basis how their portfolio has performed, right? And this facility is available across wherever clients are traveling. Please understand, all of these clients, they travel a lot. They can be in a different time zones altogether.
Right.
The idea is that yes, you have to provide them a tool which helps them in terms of to remain connected, and basis their convenience, they can always go and check out on their portfolios as well. So these all things are in place from a very beginning as well. Now, a step forward, what you are talking about is more relevant for a mid-market client, right? Ultra high net worth clients still wants somebody to service them, somebody to talk to them. Of course, as I said, technology has always been an enabler for these set of people. But there is another segment which has opened up, which is mid-market segment, where you take care of volumes, where you're looking at, say, instead of few thousand clients, you go up to, say, a few 100,000 clients, right? Now, to have those kind of reach, some of these tools, what you have spoken about, they have started now getting into play. Idea is you put across entire advisory model, basis clients' own risk appetite, basis clients what they want, what kind of investment goal that they have. So some of these things they got already been set up for our mid-market platform. And idea is more in terms of further strengthening as and when we get into the business. So in total, from an ultra high net worth point of view, which we are focusing as we speak, we have both bankers and technology, which is in place, which makes life seamless. And that's the reason we could service and we could manage such a large AUM as well. From a mid-market point of view, we'll soon be rolling it out for our clients, those who are in a high net worth category.
Got it. Got it. So if I have to summarize, you are serving typically two sets of clients. One is a mid-market segment, which is the affluent section, and then it's HNI, UHNI upwards. And this is being serviced for the HNI clients, probably via wealth managers that would be there. And for the mid-market segment, which is there, you have got your apps enabled with all the latest technologies wherein they would be able to look at their portfolio, do their transactions, everything seamlessly on their own. So it would be a DIY journey, if I have got it correctly.
So Abhijit, a small correction here. The mid-market business is getting rolled out soon. So far, we are just running the ultra-high net worth business.
Got it. Got it. Okay. So I think my next question would be to you, Neeraj, to understand about the revenue model about the company.
So Abhijit, if you are referring to the NBFC arm, so like any other NBFCs, our main revenue model is the interest on the loan.
Yeah, yeah.
So
I'd be more interested on the parent.
So if you look at the parent level, so largely I would say three main line of the business: wealth management, asset management, and lending. And obviously there are certain sub-segments within the wealth management, like equity broking, debt broking, trusteeship services, DP. But largely, I would say the way internally these are being looked at: three business segments: wealth management, asset management, and lending business.
Right.
And obviously, wealth management continues to be large, followed by asset management, and then the lending solutions.
And what would be like the revenue share across this in percentage that you would be, doing?
See, it will be kind of not fair to see the only revenue, because the wealth management and asset management is a kind of a fee business. So obviously, I mean, if you look at the fee in isolation, whereas the lending business continues to be the interest, so obviously there is going to be a large chunk of cost which will kind of get knocked off. But in terms of, if you see the PAT level, so at an overall console level of around about 800 to 803 crore of last year profit after tax at a console level, the contributions from the lending business was approximately 270 odd crores. So around about 1/3.
1/3.
Yeah.
So,
Got it.
Abhijit, just to further supplement what Neeraj has put across, all these three businesses are deeply integrated with each other.
Right.
And client, as we always say, that we do anything and everything around client. So in case, so what we have done is about 2,200 crores of top line. And a profit after tax is about 800 odd crores, which Neeraj has already highlighted. Now, if
Right.
we specifically, if we are looking for say split as well, right? All these entities, they have their own separate filing. We can always pull out this data and share with you. But as NBFC 361 Prime, which Neeraj has already highlighted, we made little over about 270 crores of profit after tax.
I think that's the, the significant part. That is basically the strong point which comes out as a group that, 2000 crores in revenue and then 800 crores in PAT for the entire 361 parent entity and 361 Prime, which is, our context of discussion today, 270 crores in PAT contributed, right? That's a significant figure in this industry. So I think next question, which would be which should be relevant for our viewers, and I would also be eager to know about, are there any notable trends in your financials that you would want to highlight on, which has been improving for you, over the years, and which stands out as a very strong point in your financial, in your P&L and in your balance sheets?
Sure. So within the lending business, we take pride in saying that, I mean, in the last 8 odd years, we have been running at a zero NPA business. So there is not even a
Zero
single.
NPA. That's phenomenal.
Yeah. So that is something which we are absolutely serious about. The credit cost has to be zero in the business. And that's the reason we run on a very, I won't say very thin margin, but not a very high margin to kind of support any credit cost. So in the last year, no single litigations with any clients, no single NPA.
So, during our previous episodes, conversations with a lot of NBFCs, the values have hovered as low as, 0.2% to as high as, 1.5%, 2%, right? So this is pretty much the first time in our discussions that we hear about zero NPA. So, which means a lot of due diligence being done before lending, right? And very robust systems in place, which is a very positive for the company for sure. So would you like to share what are those checks and balances that you have built in, which ensures you to maintain this zero level of NPA? And I'm sure it will be a deep learning for a lot of our viewers who, would be looking up to this model.
Sure. So unlike the normal LAS business, which most of our, other market participants or our peer group does. So what we do is a bit different. While we call it a loan against securities, but typically our lending is mostly against the portfolio of the client. And when we say the portfolio of the client, it will largely be a diversified portfolio, which will have the equity, which will have some debt, which will have some mutual fund, which will have some AIF, which will have some everything. So typically, in case of a stress market situations, if you are lending against particularly one or two or three securities, I mean, you can be kind of, you can slightly go wrong if there is certain a script, a specific negative events.
Right.
And then
Right.
the market runs into a back-to-back lower circuit,
Right.
then you don't get the chance to get exit. Whereas,
Correct.
say, if you are lending against a diversified portfolio, then it's highly unlikely that on any extreme negative day, you will be down by more than 1 or 2%. Because
Right.
any typical HNI client portfolio will always have a 40-50% of the debt. And this typically you won't have any negative event on a significant mark to market on the debt portfolio. And
Right.
on the balance equity, even if say there will be certain mutual funds. So obviously on the mutual funds, largely I would say mutual fund will fall to the extent of the fall in the index, which in
Right.
any extreme situations we have not seen more than 2-3% fall in a single day in the index.
Right.
So I mean, in most likely scenario, if you look at the client portfolio, even on an extreme negative day, the fall will not be more than 3-4%. So which gives you a lot of cushion to do a course corrections or to get the margin top up, even even if there are continuous kind of a negative event like a COVID situations or something similar to that.
So I'm sure you would be having a very strong risk assessment team and risk assessment models in-house, because of which you are being able to evaluate properly the diversified portfolio and how much to lend, how much exposure to take.
Sure. Typically in the market, it is said if a client or a portfolio is through with the 360 prime, then he can get the borrowing or he can get the money from anywhere in the system. And then people kind of just use our stamp that, okay, if this portfolio is cleared by the 361 prime team, then we don't kind of need to get into more details.
Wow.
That is something which gives us the
That's a
prime.
kind of legitimacy stamp on the client's credentials on the client's portfolio. That's wonderful to know. I think now Himanshu, you wanted to add some details.
So I think Neeraj has comprehensively covered. I think the uniqueness to our platform, in addition to the entire collateral piece that is being widely spoken about, is also the selection of client. Please understand this: the clients are already onboarded on the wealth management platform, or they are prospects, right? So one level of scanning which is already been done.
Right.
Now, after filtration, they are coming on the NBFC platform. The
Right.
portfolio is established, the portfolio is curated, you know about how exactly the client conduct is. Now, please understand there are two kinds of clients. One, those who have constant perennial needs. Second set of clients, those who have episodic needs. And more often we come across cases where they have short-term episodic needs.
Right.
So that's something which is the scanning of the clients and the portfolio build, which has already been done. And I think the third thing, which is equally important, is the vigilance that we have. So we have a loan management system, which you talked about, the technology piece, which does clients' portfolio almost as good as real-time basis. So at 3:30, when market gets shut, at 3:35, we, an entire team, knows that because of market volatility, how the client's portfolio stand. And to that extent, we have that additional time to go back to clients and make sure that whatever deficit or surplus that needs to be taken care of, we inform them and get course correction done. So I think it's a function of all of these factors. But the most important thing, the way we look at it, is considering our wealth management franchise, the quality of client, those who are getting onboarded.
Right. So for me, the key takeaway is one, these are HNI clients with a large diversified portfolio. There's a double layer of filtration. First, onboarded on 361 for their asset management, wealth management purposes, and then they percolate down to the second level of filtering at 361 prime. And then you have got a very strong LMS system, a very strong risk assessment team, which is sitting out there, continuously monitoring the portfolio, constantly updated with the market fluctuations, and you can always make up or make down basis whatever is the latest position in the market. I think that's an extremely clever and yet a very robust logical model which you have been able to build, and that makes sense of why it is zero level NPO. That's phenomenal. So let's move on to the most interesting part of interest for our viewers, and that is the NCD IPO issue of 361 Prime, one of the leading wealth management institutions. 361 is a leading wealth management institution. We are in context of 361 Prime, which is the lending arm of 361. The NCD IPOs have opened for application from 24th of May 2024, which is last Friday, and it is ongoing. Retail investors can participate over there starting as low as 10,000 to a completely digital journey of UPI. My question is, how much funds are you looking to raise here, and what will be the deployment of these funds for?
So the total issuance size we have kept 100 crore as a base issuance, and then with the green shoe it's 500 crore. Yeah. In terms of the deployment, we will use it for further enhancing our loan book as well as repayment of certain old liabilities which are coming for the maturity. So it's a mix of both.
Got it.
So, Abhijit, just for the supplement, this is an umbrella information memorandum which got filed late December last year. The first tranche which got opened in January, we raised about 1,000 crores. 200 crore was the base size with a ratio of about 800 crores. It all get absorbed in a short period of time. And this is the balance tranche of 500 crores, which we opened on Friday, and it is open for subscription for investors.
Got it. Got it. I'd like to ask Pranav, like, you are the lead manager for this NCD IPO tranche, right? What are your views about this NCD IPO, the credit rating, the credit quality, and what the kinds of rates that retail investors can expect to reap by investing over here? Your views, please, Pranav.
Yeah, hi. So basically, as Neeraj said, that the issue is base issue is 100 crores with an option to retain oversubscription up to another 400 crores, totaling 500 crores. We have an option to close the issue earlier if we get the required garnered amount. And the issue has been divided into 4 different categories, basically. So we need to understand that there are 4 categories. One is the QIB, QIB, corporate, HNI, and retail. HNI are individuals and HUFs having applications above 10 lakh rupees, whereas retail is individuals and HUFs up to 10 lakh rupees. And we have given equal weightage to all 4 categories. So the subscription is 25% in each category. So as far as base issue goes, 25 crores is reserved for corporate, HNI, retail, as well as QIB.
Got it.
Okay.
Got it.
And the issue has a tenure of 18 months, 36 months, 60 months, and 120 months, and 24 months. Sorry, 18, 24, 36, 60, and 120, with coupons ranging between 916 to 985. And if you will see, for this kind of a rating, this is fairly reasonable offering, considering what we had seen recently. In fact, this is a very good offering from a very premium customer, the kind of investor base they have themselves, as well as the kind of people who are associated and partnering them. I think it's a fantastic offering, and from a very credible institution. So yes, we should look forward to it. And rest all details can be found in the shelf prospectus, as well as the product notes and all that we have shared. Or you can go to any of the lead manager websites, including Trust or 361 website, and you will get all the details. The application, as you are aware, Abhijit, will be through the UPI mechanism. You can apply up to 5 lakhs, or you can even go for ASBA.
Got it. Got it. Yeah. So for our viewers, 18 months, 24 months, 60 months, and then 120 months, which is basically 1.5 years tenure to 10 years of tenure, and you are being able to, on the 10-year tenure, you're being able to get 9.86%, I think is the highest coupon rate that you mentioned, right? So from an entity like 361 Prime, right, which has got 0 NPA, a very large AUM, sophisticated clients, right? So it definitely is a fantastic offering. Retail gets to invest over here 10,000 ticket size up to 10 lakhs via completely digital medium, which has been allowed now via UPI. But if you're doing up to 10 lakh, you got to break it down into 2 applications, 5 lakh each, because the UPI limit set for NCD IPO application is 5 lakh, right? And it has already started on May 24th. Because there's an early closure option, and as you can understand, this is a premium, wealth management institutions arm that we're speaking of. So there are chances of oversubscription soon. So it's always going to be on a first come first serve basis.
So another thing, Abhijit, we missed out is that in terms of liquidity. So these NCDs will be listed on Bombay Stock Exchange. And so they will be available for regular buying and selling. So this gives a lot of comfort as well as liquidity to the investors.
Right. Yeah. So these are listed, redeemable, non-convertible, debentures.
And secured.
And secured. Yeah. I think that's one key part that retail investors should know about, that these are secure debentures, right? So that adds an extra layer of safety for the investments that you make. I'll move on to my last part, of this conversation that we are having. A question to you, Himanshu, is, what are the current trends that you see that are evolving in this wealth management industry per se, right? And how are you as an entity looking to capitalize on this?
Great question. So again, the client sophistication has, I won't say improved, but it has just gone to another level altogether in terms of expectation, in terms of ask. So the kind of alertness, the kind of agility that you need to be as a wealth management outfit, I think we can beat now global standards as well. So this is something which this entire transition has happened in the last, say, 5-7 years with the emergence of all the family offices. Earlier we were talking about, few handful of family offices. Today in this country, almost few hundred of such family offices have emerged. All have CIOs, all have their own set of team to look at each and every idea which is being put across to them. So that is how this entire overall trend of new set of clients, new set of expectations which have been kind of getting built in. Second, in terms of the product as well, we are still somebody from a environment point of view. We still do some of those conventional. We still do some of those safe and sound kind of ideas which are permissible by regulatory environment. We don't, in the Indian context, we don't have cryptos. We don't have, say, currency converters. We don't do aggressively on the commodity side, especially the oil and trades around it. So this is something which is making even a job of a wealth management manager is even getting far more challenging, because you have to create alpha over markets. And if you look at the entire run up in the market as well, the way the Nifty has performed, the way the small and mid caps indices have performed, create an alpha on top of it. I think that has made job of any wealth manager is really, really challenging and tough. And this is how, personally at our end, at 361, I think we have consistently lived up to the return expectation of clients. I think CAGR of almost 16 odd percent year on year since inception. And that's what client appreciate, irrespective of market cycles. Clients have got these kind of healthy returns as well. Now, if we specifically want to pick a trend as well, say tech, which I've already kind of spoken, these are all some of these base hygienes. Getting something which is absolutely into electronic format, again, base hygiene, right? So client over a period with all information, research reports, etc., which are already in circulation, I think there is a overflow of everything what a client needs in terms of getting updated about what's happening around a particular product or how exactly the entire portfolio is performing. Now, from here onwards, the differentiator, if you ask me, the key differentiator is the quality of bankers and how skilled they are in terms of making sure that understanding client needs and delivering those solutions.
Right.
And this is a constant journey, because please understand, the overall retention of bankers also is an extremely important part, to keep them skilled, to keep them making sure that they've been with the markets, all the requisite knowledge is with them. It's a constant journey. And I think this is where we perform quite well over any other player, because here the attrition we have is lowest within the industry, one. And second is, as I say, is most of the employees, they have large ESOP options as well, and that helps them for their own continuity and wealth creation. So some of these factors, they have made sure that we have our pole position and leadership position. And idea is that you have to constantly keep reinventing within the regulatory environment that we have. Lastly, if you look at in terms of the overall solution which the client is looking at, say 20 years back, largely a stock idea, a mutual fund, etc., that used to be the core offering by
Right.
most of the wealth management firm. I'm talking about 15, 20 years back.
Mhm.
Today, we are talking about the overall will writing, trusteeship, making sure the wealth is being passed on or transitioned appropriately to the next generation. Philanthropy, again, a very, very important tool. It's being widely spoken about. Again, this trend is catching up very fast. Forget about old families, the young families, even the new age wealth guys, they are talking about philanthropy way early than their life cycle. Now you need a very, very fast track and very, very potent practice around it.
Right.
And that is how the job of wealth management outfit, in particular on the product side, that becomes far more interesting and challenging as well.
Right. I think that was a wealth of insights that you actually shared, and puts the company, at least I mean I perceive the company in extremely good light for a couple of things. One, 16-year-old entity started in 2008, has got an AUM of 4,25,000 crores, serving the HNIs and the ultra HNI segment in the country. You're looking forward to, I'll just draw one information from our previous questions that we had, which is the growing affluent section. You are entering into that section. You have got a very strong company culture, very good set of people hired, and everybody given a piece of the company, so they have the skin in the game through the ESOP. So understandably, people will have the whole dedication and focus to building something which is sustainable. You also mentioned, I think Neeraj mentioned in one point of time, thin margins, which essentially means you are looking at a highly due diligence done kind of a business which is sustainable into maybe for the next 1 century down the line, right? So it's building up a sustainable business, extremely strong work culture, and the overall, I should say, operating procedures of your business, which has helped you to scale over here. And despite all these rules and regulations, maintaining thin margins, you have been able to make 270 odd crores that you mentioned on 361 Prime. So, I mean, puts a company in all the, tick marks of a company which is, and a group company which has been well run. So I think from my perspective, 16-year-old entity doing so well, NCD IPO definitely looks like a great option to get myself invested in for the next 10 years. But then it's up to investors to take their judgment call. I think I had a fantastic discussion with you guys over here, knowing first about the wealth management in industry, and to know in context of 361 as a parent entity and 361 Prime as a subsidiary. So thank you, gentlemen. Thank you for your time, those insights. I'm sure our, ladies and gentlemen, it was a great discussion, knowing about 361 Prime. Himanshu, Neeraj, Charu, Pranav, thank you so much for your time.
Thank you.
Thank you so much.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.